Hello, everybody. Let me hide this really quickly. Okay, I'm just going over a couple things really quick before I start, and to be sure that I have this pretty set up. It's like the eighth time that I do this already. Okay, I'm going to show you guys here Procter and Gamble. Today, what I want to do is I want to make a little extra. What I want to do is set up a strategy so that I can make money by Friday, and I want to do it using options. And the way to do it is by selling options. Okay, you can buy options, and let's say you just buy long calls or whatever. When you buy a long call, the price is if the price goes up, the option price goes up as well, and you can sell it at a much higher price, or you can wait for it to expire in the money, and you will get whatever money is available from its original. If I come over here really quickly to look at them, Procter and Gamble, and I want to look at the options. I'm sorry, I didn't have this ready. If I want to buy by July 31st, call right here that's already in the money. Let's just say that it'd be easier to have something that's already in the money, like 385. So this will cost $385. And if the price just keeps going up, it'll be as much as it's going. It's 123 to 126. So it's $3 difference. There's a $3, and the 85 cents is the break even price. So it's away 355 and 85 cents. I don't know why it reaches that or why it is at 85 cents, but the point is that if it goes up to 127, it'll go up another dollar. So this will increase 74 cents. And if it goes up to 129, it'll go up 74 plus 6. So 80 whatever. 80 exactly. And and if it goes up another one, it'll go 74, it'll go 80 plus whatever, so if it keeps going up, you'll be gaining more and more. But notice that if it goes up just $1 more to 127, this will already have increased $74. So you can make your quick $74 right there if you want to use $385 to make $74. Okay. And obviously your risk is $385. So that's the reason long calls are useful, but at the same time, very fucking risky. You could lose everything. $385. You could lose it all because most options expire worthless. Technically, this particular thing this option will actually start to lose every day $20, regardless of where the price is at. So no matter what, the theta tells you how much it's going to lose daily. Okay, it's already at $20, and that's a lot of money. So tomorrow this will be worth 365, even if it stays within the money, but it'll go up 374 if it goes up a dollar. And all that offsets. You can do that math if you want. That is exactly what people do. I'm not going to waste my time with that right now. Okay. So that is the high risk long call option. What I'm going to do is a broken butterfly. Okay. Broken butterfly wing. And the broken butterfly wing, just so you can have an idea, is actually what I'm going to tell you is that the reason that I'm doing the broken butterfly, hold on, revamp real quick. Okay. I'm going through a list of stuff and I don't get to cut this. So it's just all going to happen as it is. Okay. So I told you what buying is. And now if I'm trying to sell it, if I want to sell this option for whatever price it is, it's 385. I will get that credit 385 if this expires worthless, but it's already in the money for 126. So it's already in the money for $3. Okay, that's $300. That's 3 times 100. So if it stays up at that price, this is not going to expire worthless, and I will have to pretty much pay this. Okay, but it is going to go lower, obviously, and whatever it goes lower is what I'm gonna is the premium that I'm going to make. Let's say that it stays at 126 the entire time. Every day this goes lower $20 from here to now. It's probably like $100. So I will probably gain $100 off of it, which is not that bad for just short selling this with no, the collateral is going to be like God knows how much, because it's already they're probably going to take like a $300 collateral because it's already $3 above it. So just in case, that's what they're going to take. They'll probably even take more. I don't know how much the collateral is going to be. I wish they would tell me, but I'm afraid that I do have enough money for it, so they'll probably do it, and that would suck. So that is what selling is. And selling is between buying and selling. Just to have a quick overview of the option. The option, when you buy it, you're buying 100 contracts, I mean 100 shares of the underlying. That's what a contract is. And when you're selling the contract, you're selling 100 shares of the underlying. So it is playing with that amount, or with 100 shares. Okay, if you have 100 shares of Procter and Gamble in this case, you can every week sell at a certain price those 100, an option on those 100 shares, and most probably you'll be collecting that money. So when anybody gets 100 shares or something, let's talk about it, because you might be able to use options on that. And it's, it's a great way of making a constant premium every week. It's exactly what people do. So I want to do every week, I want to sell a set of an underlying, maybe one or two, I don't know. But right now what I'm working on is Procter and Gamble. I know Procter and Gamble is going to have their earnings this week, by what we all talked about, and so I know there's going to be a little bit of volatility. So I want to play into Procter and Gamble for this week. Okay. So now I've told you buying and selling overall, and I've explained to you that the collateral when you sell. Okay. Now let's look at the stock. So just a quick to show you that this stock is awesome and has been following along the market since 1969, which is, I think, like the beginning of when we started recording things. There's probably a lot more of it, but that's when there was a lot of recording. What I wanted to show you is this really cool correlation to what is going on in the market. Notice that right here in 00 was the dot-com bubble, and everything fell. So this was a really big fall. Maybe there's another one over here in like 87. And I remember I read something in the 80s happened in 87. Exactly. That's the fall right there. Tiny little thing. And then this big old thing right here happened. That was the last time that a huge fall happened. Okay. Let's try to measure exactly what it was. Holy crap. That was not what I wanted to put. A ruler. From here to here was 32, negative 32, 58 to 26, negative 32 points. Okay. So, and then this one here, this fall happened. 08 comes over here. And then in 10, this happened. This fall, this was the next fall, the real estate crash or whatever, or the bank crash. I don't know which one was it that caused. 29, pretty much a little less. This was 14, some shit happened, and this fell. I don't know if it has to do with the economy itself, but it just happened to happen. 28, and now these are all the crashes that have happened, and I'm showing you them reflected in Procter and Gamble in 33. So this was a really big fall. When I look at it here, I was like, oh, it's not a big deal. This fall that just happened recently is not even compared to this, but it actually is. It was much bigger. Oh no, this was like 50 something points, right? No, 50 something to 20 something. So yeah, it was like 30 something points, and this is 30 something as well. Let me do this one more time, just show you guys. I'm sorry, I'm showing you this history right now. 32 points. So yeah, this has been the biggest fall, one of the biggest falls in history. Okay, another cool thing about Procter and Gamble is that since it's so damn awesome and following the economy, it has already shot up to the prices of February. Okay, that is a great sign. A lot of them haven't done that yet, and Procter and Gamble, being the powerhouse that it is, to have it done that way, it's a good sign. It's a very good sign. It's also following the market, guaranteed. So if the market happens to fall, this is going to fall too. Or the market's heavily invested in Procter and Gamble, so it'll all be there. Maybe Procter and Gamble keeps it up if some shit happens. I don't know. I don't know if they've changed their assets in the way that they do things. Remember that the company and the price of the stock is not a true absolute reflection of the company. It's just a reflection of the information that they put out, okay, or that everybody knows about it, okay. So now the strategy that I want to do involves selling options and buying options. That's why I like this strategy. And I read it, and my boy Ricky will tell you that okay, YouTube pretty much told me, I didn't read that. YouTube told me that you can pretty much play this on any underlying at almost any time and still make money off of it. And I'll explain exactly why. Okay. Let me just be sure of it. what I'm showing you guys, this is the strategy. It's called the skip strike with butterfly with calls. Okay, it's a skip strike or the broken butterfly. Okay, the butterfly. This is the wing. I don't know, who is the one that calls these images, but whatever. So the idea is that I'm going to buy one option, a call. This is with calls. By the way, you can do the same thing with puts. This is when to run it is when you're slightly bullish and you want the stock to rise to B and then stop. Okay, to B. So I'm going to buy one at A. I'm going to sell two calls at B. I'm going to skip over C and I'm going to buy this at D. And it says generally the stock will be at or below strike price A. Okay. So if the price is at 126 right now, strike price A, the first one, is going to be pretty much in 126 or in 127. Now, the idea is you want to know what it is that you're going to do. And I'll explain to you what I'm going to do and why I'm going to do it. I'm going to end up I'm going to try to sell the 128. Okay. That is my goal here, to sell the 128. And the reason that I want to sell the 128 is because even though this has following the market and all this kind of shit, I can clearly see that the highest price it has ever been at is this 128. Okay, it's never gone higher than that. So there's going to be a lot of contention at that point. There's going to be a lot of people fighting, for sure at that price. So 128 is a good price. The idea is also that if it's definitely open to break out. There's a huge opportunity that it could just keep going up higher, but that's probably going to be very well correlated with the market. Okay, so if the market's going up, this is going to go up. Okay. I keep repeating that, and I'm sorry about it, but it's just that I'm doing this thinking that it's going to stay at a certain price. Notice that it said when you're slightly bullish, you know that it's going to go up, but you want it to stay at a certain price. So I'm afraid of it going up higher than what I expect, but I'm expecting it to be at 128. That's the highest that I'm going to go. It's not even there right now. It's at 126. So I have $2 for it to rise up. Okay, which is a nice view, because this shoots up monthly. It shoots up a couple dollars, maybe. There's a high volatility every month with it, but I'm not playing on the month. I'm only playing this week. So I already see that the highest price is here, and this is, I'm going to just put this as the lowest price possible. This is the resistance up here is the highest point. There's fighting going on right there, and I'm going to put this here as the lowest point possible, the lowest support. Okay. So I'm going to put these thicker because they're the big guys. Okay. So what I want to do when I'm doing my analysis is I want to go in a little bit deeper, especially since I want to play in the weeks. Okay. And where I want to play is just this week alone. Okay. Just this one here. In the weekly chart, I'm noticing that it's up on this trend, but it's already found this resistance here. It peaked up here to previous highs. These are the highs that it came up in February. And once it peaked close to it, it didn't actually hit it, but once it peaked close to it, it started to come back down, or it's starting to show a little bit of like, I guess, consolidation. Not consolidation because it's not consolidating. It's actually starting to range out. And that range is here. Even though what I'm seeing is this stair step here, there could be another stair step up and it would shoot up, But we already see that the last time it tried, it didn't work out. So I'm going to go in just a little deeper and start noticing where we're at. Notice this range here. Okay, this is it's a pretty big, range to be going by. On the weekly, I'm going to put this down here as the next low. Okay, the next support that it has. I actually have it here, somewhere around here. It kept coming to this price and bouncing. Okay, I'm going to put this one. That's the thing, and I'm going to make it a little less because we're in it. And we're up at this point. We're still up at this point. Now the range for this time has been brought to this point. Instead of being all through here, all this could happen. Now we're here. Okay. Now we're in this area. And where I want it to go, or the farthest I want to get up to, is July 31st. So I'm going to mark July 31st as well. July 31st, with the blue. So this is as far as I want to go. Okay, I'm looking at it really quickly to see if I can see any sign of anything. When I'm here looking at the daily charts, okay, I want to look at the Bollinger Bands. Bollinger Bands are telling me that on a daily range, it could go all the way down to 118, and it could even shoot up past the 128, okay? It had its opportunity recently. So all it has to do is have one more candle to let it know what's going to happen. But right now at this point, with this shooting down like this, especially coming down from this range, this is where it's at, which is good for me in my mind, right? Now let's look at another indicator, the MACD. Instead of looking at the MACD, I'm going to look at this one over here because it's kind of the same thing, but it gives me a buy signal. Okay, so it did have a recent buy signal, and this is exactly what I'm looking for. I'm looking at it on a day range, and it's already gone through a big range, and it's reaching this point of crossover. When you have these crossovers, it gives you a buy or a sell, depending on what side is going on. And the last one was a buy, so the next one's going to be a sell. Okay, if it reaches here, it's probably going to start going down just a little bit, which to me is great. I don't want this. If I own this stock, I wouldn't want this stock to go down or anything like that. I don't want it to fail. I just want to make money off of the fact that people think it's going to keep going up higher. Okay, and that's how you keep making money off of the options when you're selling them. People are going to constantly buy these options at a very high rate, so you might as well be in there selling it to them. You know what I mean? So on the weekly chart, on the daily chart, I'm looking at it. I'm like, oh, this is good. It's going to have a point where it's going to go down, perhaps, right? Based on this oscillator here, and this thing could be wrong completely. So who knows? And then if I want to keep looking at it just really quickly, I'm going to look at the moving averages, 50, 10, and 200. That's 50 periods, 100 periods, 200 periods. So the long, the mid, and the short. Short term being could be like 20, or maybe even 13. Some people use less, or 12 or 10 or whatever, but this is the one that I use because it gives you an overall view. So in the long and the long term, it's trading much higher than its prices, and we know that it's the highest price it's ever been right now. It has been at this price before, but it's high right now. In the mid range, it's trading obviously much higher. Let me see, but it has had this cross here, and if we come over here to the oscillator, we'll notice that this is exactly what the oscillator is reading. How do I have it? Look at right here, exactly the cross. So instead of reading this, I could just have this and not have to worry about it. But I like to have all of it. This is my favorite though, because it is a very good indicator of it. Just having the simple moving averages, that's pretty much what everybody bases everything off of. So it had its buy signal here, and now it's on the up. Now this is the difference. The oscillator here is telling me that it's reaching a point. This is not telling me that. It's telling me that it could keep going up, and I don't know what to believe, but I kind of want to go along with this because this is on somebody else's map. I mean, whatever. Overall, you have these things so that you can try to find like 5 different good strategies to trade on, and then if they all point to yes, then maybe you go along with it. Sometimes it doesn't work out, but you're really just looking for a whole bunch of things to tell you yes, So here I have that it's going up, while here I have that it's reaching a point. So that's good. That to me is good, because what I wanted to do is just reach up to here in the same range that it's at right now, and then do whatever you want. I don't care. I'm not trying to hold you back. I'm just trying to make a little bit of money. Okay. So I come over here, look at the 4 hours just to be a little bit deeper. I'm actually going to move into like the hour thing, but I can have a good amount of space here, because what I want to do is place this as a visual aid. The highest that I want it to go to is up there, and the lowest that I want it to go to, if I'm buying the 126, is at 126, believe it or not. I don't want it to go lower than that. I want it to stay where it's at, and 126. So I want it to trade within this range in any way it wants, okay? So I know that my highest is 128. My lowest is where it's at right now, 126. So I come over here, And now I'm going to do the strategy. I'm selling at strike price B. Okay, I want to buy a call at strike price A, which is under B. If this is A, I'm sorry, this is B, then this is A on the 127. And then you're going to skip over the next whole number and go to the one after that. Okay, so 129 is the next whole number, 130 after that. Okay, so here you'll notice the credit is 309. That's fucking, oh, because I'm selling all of them. I'm sorry. Okay, I only want to sell the 128 and I want to buy the 130 and the 127. And I want to sell two. Okay. Now, the reason this works out in this manner that you have four is because when you're selling them, you have technically a negative 100, right? And when I buy one, I have a positive 100. So this is making between two negatives and two positives a zero, okay? That means that if I'm getting paid 20 bucks here, if things go wrong, horrendously wrong, let's find out what would happen. Come over here. And I don't touch it, you know, I don't try to mess around with it. I leave it exactly as it is, and things go horrendous and it shoots up all the way to 135. $135, I would lose $84 and maybe a little bit more if it kept going up or whatever the hell. And the same way, if it shot down, I wouldn't make as much because I have all these calls that are saying that so this is a range bound strategy. I wanted to stay within this range. But the reason that this strategy is awesome is because it does give you an opportunity to be able to make more money if it's going to break out of that range. Okay, that's why this strategy is the shit. Okay, if I'm buying the 126 call, so that we have an understanding of what each one of them are doing. If I'm buying the 126 call, I want the price to shoot up so that I can keep making money. The more it shoots up, the more I keep making money, and when it expires, it'll expire based on whatever it is here. You don't have to wait until expiration to close an option. You don't, a contract. You don't have to wait until, the whole point is that you don't wait until expiration. You try to sell it ahead of time. So if you buy it on Monday, you try to sell it on Thursday, and the whole time you've been losing value based on the time. So when you're buying things, there's value being lost constant. And when you're selling it, the value is staying. The value can fluctuate, but what you're going to get is where it was at when you bought it. Okay. So that's what this the 127 is doing. It's not in the money actually. It's at 126, but it's worth $1.46 because it's, I guess, $1 away. It's so close to it, so they're putting that. But this will expire worthless if it stays at 125. I mean at 126, and it's already going down in price. Now this is in the money. Okay, so if the price goes up from 127, this will be going up in value. If it stays at 128, okay, so that's this one, sorry, right? So that's the first one. That's how that one is making money, right? Once it gets to 128, if it starts to go up 128, the 127 is making money and the 128 is losing money. So the 127 is covering the 128's losses, okay? That's the reason that you do strategies to cover yourself, and a lot of times you can go into strategies without paying. You always have to give up a little bit of collateral or something, so just in case something happened, but you don't end up paying for it. And the more you do it, the more the price overall works out for you. You're not really putting in money to trade. You're just putting in a little collateral in case something goes wrong. Okay, and then the same thing with the 128. If it starts to shoot up higher than 128 and it's already going up to 130, I have this 130 call to be able to pick up all the money that I'm losing off of this selling over here. Okay, so with that strategy, you're seeing that there could be an opportunity for it to lose money if the price goes up, right? And if the price is going up, if the price is going down, the 127 is losing value. The 130 is losing value. So if I buy it at 146, the most I can lose is 146. And if I buy it at 54, the most I can lose is 54. So let's say it goes down to like 125 or even 126. By the end, by Friday, these will both be worth zero, but this will be worth 110. Okay, and I'm buying two, so it'll be worth 220. Even though these lost money, 154 and 146, notice that it kind of exactly matches out to that number, and it'll end up being 20 bucks or whatever the hell, you know. That's why this price is here. That's why they're giving you this $20, because that's probably what you'll end up gaining or losing if something goes, awry. Overall, that's probably what I stand to gain from this. Okay, the $20. Let's see if there's anything else that I might stand to gain. If it stays at 128.25, I would wish that this isn't in this kind of increment. But if it's at 127, when I sell this, give me 1 second. I don't want to give you any ums. So let's look at this right here. This is a calculator that I put. And there she is going in the bathroom.
What?
You completely ruined my entire video. I had gotten so far. I was doing things correctly.